Mike Briggs is our market analyst this week. 2017 may end up being the best year ever for U.S. beef and veal exports. Data released Monday shows through the first 11 months of 2017, shipments had surpassed every yearly total except 2011. The strong pace was led by Japan, which will have its best year since 2003. Additional demand has also come from China. Since reopening its market to American beef, China has imported almost $23 million worth of U.S. product. More than half of that has come from Nebraska. Meanwhile, futures prices slumped into the start of this week. The February 2018 live cattle contract closed Monday $14.52 off November's high. We talked with Mike Wednesday morning about beef demand, meat production, and the dip in market prices.
Well, it's been a really unfortunate situation because 3 times in the last 6 weeks we've had the packer in the corner on a Friday or a Thursday or a Friday afternoon, and the board bails them out every time, and it's all fund selling, and that's a pretty big flashpoint for me because it just drives me nuts that the CME lets these positions get so big on these funds that when they decide it's time to go, they move the market in whatever direction they want it to go in. And it's really frustrating because what's going on the board seemingly has nothing to do with fundamentals, because from a fundamental standpoint, we're good. Our weights are below last year. Our marketings are over 100 in every cattle and feed report. We're marketing cattle right along. There's not a whole lot of market-ready cattle now. And then the board drops $14, and everybody's like, well, why? Because cash has not changed very much. Cash has varied between 120 and 123 maybe, and you have a $14 break in the board. What's that telling you? They're not matching up, and that always drives me nuts because the board has to be a risk management tool for those of us that are actually in the industry, not a roulette wheel for commodity funds.
The last time we were here, we were talking about high placements in October then, and you thought as long as demand kept up, you thought we could keep chewing through the supply. So tell me how demand has kept up.
Demand has kept up very well. Exports are excellent. The prices in the stores are so much better than they were last year, and people feel better, and people have a little more money in their pocket because the economy is doing well, and demand for beef is excellent. We just, as an industry, we need to not let our weights get out of control, and we've kind of done that here a little bit. Now we have these storms, and that may all go away really fast. But we need to be careful not to overfeed our cattle and put too much extra tonnage on there because we are killing extra animals.
Is there a place where, or a time when placements start to lower back down off of high levels that they've been at?
I don't know because there's so many outside influences to that. One of them right now is Mother Nature. You have a horrible drought, Montana and the Dakotas, and now down in the wheat pasture areas where a lot of these cattle that would typically go to wheat or are actually already on wheat, there's no wheat. So they're coming into the feed yards, and there's just nothing we can do about that. I think that causes us a problem down the road because I think we're going to overload the system with beef sometime this summer.
Well, let's talk about that. Until you get to grilling season with more pork and beef and chicken here in the first half of the year, how do you remain a competitive alternative?
It's a great question. Now, it was pretty highly promoted how we were going to have beef tonnage drop the first quarter. And it kind of seems like maybe that's right because there doesn't seem to be a lot of market-ready cattle. I think we're going to be okay into April, maybe in the first part of May, but then I'm afraid our beef tonnage is going to catch up with us and we're going to have a problem. But we kind of have control of this deal a little bit ourselves. We just need to keep marketing cattle right along. But I really wish we could do it at a more, what I perceive as fair price, because the packers really getting away with it right now.
Where do you think the fair price is?
You know, that's tough to say, but we're trading cattle here. We've been trading cattle in this 120 to 122, 123 deal for quite a while. I think we should be more in the 123, 127 camp because the packer is just making huge margins. He doesn't need to keep all that, you know, need to share a little bit. But what's going on with the commodity funds, everybody looks at that futures board and that kind of fortifies or takes away your attitude every day. You know, if the board's up, you feel pretty rock solid, and then when the board's down, your dauber's kind of down. And it makes it really hard for us to market cattle the way I guess I feel we should.
What have margins been like?
You know, they've been okay up until maybe like now, because they're probably still okay. There's probably a little red ink out there, but I think there's probably more of black ink, so it's not bad. But we're not making the kind of money we should make, and the packers just ripping it in with both hands, and that's a little frustrating.
Are people eager to place?
That's a good question. Can you buy value in feeder cattle right now? No, you cannot, because everybody's anticipating the downfall of this market, and you've got that summer market a good 10 bucks behind where it is now, 8 to 10 bucks behind where it is now. So a lot of that's getting built in, but that's really hard if you have a discount futures market trying to buy feeder cattle. So it's really hard. There's not a lot of value. But having said that, because of the drought conditions and also the fact of cheap corn, you're having a lot of pressure to put cattle in the yard, and that's what's happening.
You hinted at this a little bit more, but tell me about the performance here in the feedlot. When there was a little rise, people thought it was the bad weather and people couldn't get to the sale barn and not put pounds on animals.
Performance in the feed yard has been great. I've told a lot of people, if you can't feed cattle in this weather, you better go get a new job, because the yards have been dry, the weather's been, you know, pretty moderate. Now we got into that really cold stuff last week, and a lot of people are asking me, well, how'd the cattle handle it? Really fine, because they went into that thing dry and clean and fluffy. You know, they are covered in hair and leather, and they did great. Now we're gonna get whacked maybe here the next couple days. It's a little damp in the pens now. If they get wet and they get muddy, that's gonna hurt a little bit. The good thing is we're in 2018, we're not back in like November or something like that, where you know you're gonna have to battle it all winter.
Give me your price forecast.
I would like to think we'll stay in this 120, 125, maybe going into April when the girls fire up and there's not too much supply yet. Maybe we can edge that past 125 towards 130. I think the summer could be a bloodbath, but we thought that last summer too, and we chewed right through that. So it's going to depend a lot on how many actual numbers are, how much tonnage we put on, and then we got to hope demand stays in there.
I will ask also, there's an inventory report at the end of the month. Is there anything specific you're looking for?
You're going to want to look at the trend to see if we're still building the herd. I really got a question with what's going on in Montana and South Dakota. They're just liquidating cattle like crazy. You see the drought continue in the south, they're going to start liquidating cows too, because it's just like it was in 2012. If there's nothing to feed them, they got to go. And that will have some interesting effects going forward.